Look, 75% is a lot, but there also comes some significant milestones and also then talk of 50% growth in car production by the end of 2026. Can he make that, Gene?
No, the simple answer is that probably not, but that's what Elon did a master class is ultimately is throwing a ball out there that is difficult to achieve, but he has the wherewith to do that. And so that ball, you talked about the production piece, this 50%, he puts that target out there, but then he adds these kind of qualifiers that say that, yes, we can do it, but we can only move as fast as the slowest part of the production chain, that pipeline to get them to build the whole capacity, to get them to build capacity. And separately, when he thinks about Optimus and what the potential is there, I mean, this is something that he outlined as a kind of a 5-year, 10-year plan, but it is ultimately something that, getting to 10 million robots a year, I just want to put that into perspective, 10 million a year, they're doing 2 million cars a year. And they really got moving in earnest on the car production in 2019. And so it's taken them 6 years to get to 2 million. These are huge targets. And Caroline, at the most basic level, he put big targets out there. That's what he does. And that's the mandate that investors gave him with this vote of this pay package, is they want these big targets out there, and he's delivering on that, whether it's the production or the commentary about Optimus.
Investors excited, your dog's excited, Gene. I'm interested about what, therefore, he has to do to keep up with the momentum now. Because, look, let's just ask you a basic question. Many were worried about a 25% ownership for Elon because of the control, not so much the $1 trillion pay package. It's more about that he's going to be controlling the robot army. Is that something you want to see, that generally society wants to see?
Well, that's what he wants, control, and the answer is no one wants an army of robots to be controlled by one person, but most 75% plus of Tesla investors want a company that's building that to be controlled by one person or controlled by Elon. And I think that that makes sense. Elon's been very clear that if he wants to build this army, if he wants to build this AI vision company, he doesn't want to be pushed out. He also left open the option for him to get pushed out, in his words, if I go insane. And so I think that's an important distinction too. He has control, but that doesn't mean that he's going to be at Tesla forever.
I think going back to basics is really critical here, Gene. So there's the mechanics of what happened. The vote passed, the package was approved, and then Elon Musk spoke afterwards. And he actually gave some information that relates directly to the milestones the company has set. So in the middle there, we're saying the board is tasking him over 10 years to deliver 20 million vehicles, right? He told us in his remarks that 2026 would see 50% annualized growth. That was something material, was it not?
We said 50% annualized growth, but then he put the caveat, if the supply chain can provide the components to get them to increase the capacity by that much.
Right.
It's a similar caveat that happens when he says we're going to have autonomy, full FSD approved in 1 to 2 months. That was his comments yesterday, pending regulatory approval. And so I'm a shareholder of Tesla. I think that this company is grossly undervalued. That may sound like it's out of touch with reality, that comment, but I think it's grossly undervalued. But I also am realistic about what goes on here. There's these targets that get put out there, but then there's these caveats that are out of his control that will be put on any sort of some of these really big targets.
You noted, as many have done, Musk's comments on silicon, and it was a throwaway comment, that the idea that Tesla might do its own fab. Are you taking that seriously?
So I'm not taking it seriously. I think that Elon wants to make a point, and the point is I think he's frustrated about what he is paying for silicon. If you look at all of his enterprises, SpaceX, XAI, Tesla, Neuralink, all those combined, the biggest line item on those outside of people is around silicon. I mean, he spends a ton of money on that. What he talked about here was having similar performance as Blackwell, NVIDIA's Blackwell GPU, at a 10% of the cost. You think that that's doable? And I just want to kind of put that to the test. Is that kind of performance, that kind of cost performance is something that is, I think, unrealistic, at least for the next few years. It's the same reason why NVIDIA has been so bullish on their business, is that these customers would love to find an alternative, whether it's through custom silicon or through AMD, for example. But the reality is that NVIDIA still is the best bang for the buck when it comes to silicon, and that's a very expensive buck in this case. So I think that I generally don't think Tesla is going to or should do their own fab. I think $20 billion can be spent in much better places. He kind of threw the lifeline out there. Maybe we work through Intel. It's been a challenging road for Intel on the fab side. And building a fab, advanced fab, is really tough. These advanced nodes are very tough, and Intel's never shown they were competent in that.
Gene, broaden that out, therefore, because look, the whole market has a lot of anxiety on its shoulders right now around the build-out of generative AI infrastructure. Now, in particular, we saw Sam Altman trying to navigate what had become a bit of a explosion that the CFO had set off on Wednesday by saying maybe they'd look to some sort of government support for their infrastructure spend. Sam Altman came out and said, look, the only way we'd want government support is perhaps if we became a fabricator of chips. But what do you make about the weight that is currently on this market about vindicating $1.4 trillion spending by a company that's making maybe 12 billion, call it maybe even 20 billion a year in terms of revenue?
So there is a switch that flipped since the end of October. I think it was like the 28th of October is when Jensen came out and said that NVIDIA is going to essentially beat the expectations by 15% plus over the next 5 quarters. He put out this $500 billion in Blackwell revenue, and that was a really big point. And then we had the hyperscalers, and then this conversation started to shift. There was a change in terms of how the AI investor is thinking about this. And the shift is this sense of like, wow, maybe this is just getting to be too much. We saw it happen with Meta stock. And then on top of that, Sarah Fry and the Sam Altman and the Goldman or the Wall Street Journal event, all that kind of, I think you put all this together, and is all of a sudden this vortex of what's really going on here. Whether it's the government piece, whether it's the expectations that NVIDIA has about how much they're going to sell over the next few quarters, whether it's Meta saying how much they're going to spend in Amazon, it just feels like there's investors are now at a point where they're uncomfortable, that they don't believe that this ultimately is going to be prosperity. There's going to be prosperity around this investment. And so I think that's the shift we've seen. That's why I think we've seen sell-off in these companies. The fundamentals are rock solid. OpenAI doesn't need government support, there's no question, but there's a psychology piece to this trade, and I think it's just gotten softened by some of these conversations, just too many moving parts now for investors. That will settle down once they start to see the December quarter results and understand that, in fact, we are still early in this AI build-out.